Good afternoon and welcome to this capacity building session. We're going to be talking about this for the next hour. We will also be talking about the impact on these capacity building programs, impacts and challenges that may uh, be faced by different tax authorities when it comes to international taxing. I've got several different speakers with me today. The idea is really to go through the international um, program that has been put into place for transfer pricing, international taxation capacity building programs. And we've also invited different speakers to take the floor, different countries who are benefiting from special technical assistance from the OECD, both for transfer pricing, but also on a broader basis for international taxation. I would like to thank them for their presence today, and I will actually be introducing them one after the other. But I would like to begin with by thanking the representative of Tunisia, of Zambia, of Ukraine, and we also are lucky enough to have a representative of the ECOWAS Commission as well as someone from Colombia. Without further ado, I'm going to be sharing the presentation with you, and we will be able to get under. Maybe before to get into the heart of the matter, what I can suggest is that we can give you a summary of the presentation that will be given this afternoon. I'm going to be starting off with the broad scope of the assistance that is provided by the OECD for transfer pricing and international taxation. Following this, I'll give the floor to my colleague Thomas Balco, who is actually sharing the floor with me this afternoon, and he will be talking about the impact in developing countries, so those that we're helping. He will also talk to you about the different channels that are being faced by some of the tax authorities that we're supporting. We will finish this session with the regional approach case study, looking at the technical assistance that has been provided in West Africa, and we will talk about the program that has been rolled out for our member states in West Africa. Let's start with the broad scope of assistance provided by the OECD in the framework of transfer pricing and international taxation. We work with, upon request of different countries, we have, specifically speaking, transfer pricing. We also work on BEPS related issues, but also MAPs, APAs for transfer pricing, and everything that is linked to current work that has been done in the digital domain and the different challenges that arise. For some of our programs, we intervene in partnership with other groups, for example, ASAF, which is the African Tax Administration Forum. We also work with the European Union, with IGF, which is the Intergovernmental Forum for Mining and Minerals, and we work hand in hand with the World Bank Group. We have different domains that we work in. For, as I mentioned, this is upon request of the different beneficiary countries, and we offer assistance in different facets. We can look at different aspects that are on the screen to begin with. Often we are uh, requested to help with policy design or legislative drafting, especially when it looks at aligning their policies with international standards. For the legal aspects, we've also worked with countries, and we try and accompany them in revising their policies and their legislation. But it is really them that are in the driving seat, and them who tell us what the different amendments that they wish to bring to existing legislation. We also work from a capacity building point of view. Here, we offer training for our partners, and we also ensure that the multinationals are paying what they need to be paying from a tax point of view in the countries that they're operating in. We also look at supporting countries in creating structures that are specialized, for example, the creation of special units for controlling transfer pricing, and we help them in putting these different structures into place, and we propose adequate governance structures and recommendations organizations for them to take the necessary measures to create these different specialized entities. As you can also see on the screen, we are present across 5 continents, and you can see the number of countries that benefit from our assistance in the framework of this bilateral program that we've rolled out. We're in Latin America, where we have 7 countries. We are also present, as you can see, in a majority fashion in Africa. We are in 33 different countries in Africa. We are also present in East Europe, 6 countries, and in the Asia Pacific region, 5, and then also in Oceania with 1 country, which is Papua New Guinea, which is supported currently by the OECD. We want to be able to support the 5 continents, and in order to do so, we have a multilingual team which speak English, French, Spanish, Arabic, Russian, Portuguese, and other languages that I haven't yet mentioned, thus allowing us to really provide tailor-made assistance and services to the different countries that we help, and also provide this assistance in the language that they speak, so that the assistance is as sufficient as possible. I was telling you that our assistance is relatively vast, and we have a very broad scope of assistance provided, and therefore I decided to invite Tunisia. Tunisia will be our first country experience that will be shared. I would like to ask Ms. Fatiha Gabi. Madam Gabi is a director, general director of taxes in Tunisia, and she will be talking us through the program that Tunisia is currently benefiting from, and this has been the case for several years now. And this covers an extensive uh, plethora of domains. But I will let Ms. Gabi talk us through this. Ms. Gabi, you have the floor. Thank you very much. Good afternoon, Samia. Good afternoon, everyone. I'm delighted to be here this afternoon to present the country experience Tunisia for the Tax Development Days, organized by the OECD in order to present rather the country experience of Tunisia and the different assistance that we have been benefiting from for several years now. Can you hear me? Yes, 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 we can hear you. Thank you very much. I would also like to underline the fact that the technical assistance is unique because of the broad scope that is provided. This assistance looks at lots of different domains, including transfer pricing, the fight against bets, um, information sharing, VAT, the fight against informality, fiscal policy, and also fiscal and other fiscal questions. We know that this has also been helped by progress that is made. For example, a legal framework that is aligned with with recent national frameworks, and we also have different policies for independent workers. We've also had the Tunisia that signed different international agreements, the MLI, the multilateral agreement between different competent authorities for the share of country by country reporting. If I now think about transparency, Tunisia is the top African country with regards to the amount of intelligence that is coming out of our country that we send. We've looked at 1,669 requests since 2017 up until the end of 2023. We are also committed to implement automatic exchange by 2025. The assistance that has been provided by the OECD has also allowed us to strengthen the different capacities for tax officials, for transfer pricing, and also intelligence sharing, so that they're able to get the best out of the progress that has been made. For an indicator, we have 1,414 agents who have been able to benefit from training that has been given by the OECD since 2019, right up until the end of 2023. The different assistances provided for by the Tunisia has all by the OECD rather to Tunisia has also led to the creation of different specialized roles. One of them is linked to intelligence sharing, and the other on the fight against tax evasion. All of these different progress, all of these different examples of progress would have only been possible thanks to the relationship that we have, the trusting relationship that we have with the OECD, and this is a long-standing relationship. To conclude, I think that it's important to remind us of the importance of financial support received by the European Union that has allowed Tunisia to really gain the most it could from the assistance proposed by the OECD over the course of several years. Thank you very much for listening. I think that there are important elements to take away from what you have said is that this program is very broad, as you can see. There, we've got transfer pricing, we've got BEPS, but not only, we go above and beyond just these two domains. If we think about fiscal policy, if we think about other issues that come into play. And as Madam Rather Gabi mentioned, everything has been made possible thanks to the support that has been given to us by the Tunisian authorities, but also a very special relationship between the OECD and Tunisia, a very trusting relationship with the two of us, which has allowed us to get the results that we are and should be congratulating ourselves for. I would also like to make the most of the uh, afternoon to say that the case study on Tunisia is also available on the OECD's website. I would strongly encourage you to read through it so that you're able to really get an idea of the progress that has been made in Tunisia over the course of the past few years from a tax point of view. So congratulations to Tunisia once again. We are now going to move on to our next speaker with the presentation, and we will be, I said earlier that it was these different points have been rolled out across the globe. And it's also interesting for us to look at the impact of when it's a program looking at capacity building for developing countries. And in order to do so, I'm going to give the floor to my colleague Thomas Valco. Thomas Valco, who is going to be talking through the impacts, but also the challenges faced. Thomas, it's over to you.
Thank you, Samia, and hello, everybody. Nice to see you, at least virtually. I would like to briefly highlight what are the key impact areas of our capacity building work on transfer pricing. I would like to start with the impact that is there in form of the legislation that we help countries to put in place. The work on supporting the legislative implementation is often based on supporting with drafting proposals, explaining the rationale, and ultimately the work that we do has resulted in over 51 countries either already having implemented comprehensive transfer pricing rules or are being in a process of implementing them. This may seem like boring, having legislation in place, but actually it's very important because once you have a proper legislation in place, you start to benefit from the phenomena of voluntary compliance. There is a percentage of taxpayers who will start following the rules once you implement them in place, even when you may not have necessarily all the necessary infrastructure in place, for example, fully build up capacities to administer these rules. So that's a very important achievement. Now, work on legislation comes hand in hand with improving tax certainty by clearly stipulating the provisions and expectations of what is expected from taxpayers. Taxpayers have clarity and understand what is the requirements. We have the feature of voluntary compliance, which I mentioned. And of course, to the extent the legislation is in line with international standards, we also have a positive impact on the investment climate. Because if countries don't have transfer pricing rules in line with international standards, you may face divergencies, which can create double taxation or risks of double taxation and other unpredictable outcomes. So it also has a positive impact on investment climate. The next part of our work relates to building the capacities, and I think we can separate it into two areas. One of them is providing support and advice on organizational development of tax administration. Transfer pricing rules are one set of the rules which are more complex to administer. So you need expertise. You need to have specialized teams. So we provide support in tax administrations to help them design their strategies and plans on how to build these capacities over time. Transfer pricing function is not just audit. There are different dimensions to transfer pricing tax administration function. You have the dimension of methodology. In other words, teams of experts which provide methodological guidance, both to the taxpayers in terms of giving them guidance on compliance, but also to the tax administration, giving guidance on how to properly interpret the legislation in line with the international standard. Furthermore, you have, of course, the audit function, but it also doesn't stand alone. Oftentimes, the effective tax audit requires effective risk assessment. So it's building the capacities in the risk assessment area so that there is proper selection of the cases for the audits. No country in the world has indefinite resources on tax audits for transfer pricing. In fact, most countries face challenges of limited resources. So it's very critical to have the right approaches in selecting the risky transfer pricing cases when you already decide to deploy those limited resources. So capacity building in the risk assessment. Finally, we have the tax audit, which I was referring to initially. So you will see that it's only one of the components of the tax administration in transfer pricing. And of course, you need to have very specific types of skills. Skill set that requires analyzing the facts and circumstances, what we call accurate delineation of the transaction, effectively carrying out a comparability analysis, which is a degree of economic analysis. Finally, it doesn't stop there. Many of the cases, once you bring them through the audit and successful tax assessment, it may not be the end of the story, because what may continue is a dispute. And that dispute may need to be either litigated in the domestic courts, or also it may require dialogue with other tax administrations. So you also need to have capacities to lead this dialogue with other tax administration from mutual agreement procedure, or providing the necessary support to the lawyers who will be arguing those cases in the courts. So as you can see, that's quite a strategic element of our work. And of course, there is the capacity building through the training and knowledge raising and building the confidence of the tax administration. There, we have provided support to more than 45 countries in this area. Finally, working on transfer pricing and capacity building is a long distance run. And in the process, we build relations and trust with our country partners, which also facilitates other types of dialogue that we do and facilitate at the OECD. There are a lot of linkages between the work on transfer pricing and other instruments. For example, transparency, enabling countries to exchange information with other jurisdictions. Also, other linked areas such as the multilateral instrument, or using the tailor-made capacity building support through Tax Inspectors Without Borders. So that gives you an overview of the areas and impact that we have achieved so far. And I think with this, we can move to the next slide. And I would welcome a short intervention from our colleague in Ukraine. It will be Mrs. Lyudmila Palamar. She's the Director of International Taxation Department at the Ministry of Finance. Mila, are you with us? And could you please share with us briefly the experience of Ukraine, and in particular, the effect of voluntary compliance that you experience?
Thank you, Thomas. Thank you, dear Thomas, for the introduction. And I would like to welcome all of you, dear participants. First of all, I would like to express my gratitude to the OECD for the long-term support of Ukraine in the building of its transfer pricing and international taxation capacity. For more than 7 years, since 2017, when Ukraine joined the Base Erosion and Profit Shifting Inclusive Framework, the Ministry of Finance of Ukraine has been pursuing its consistent policy aimed at implementation of the OECD international tax standards, policies, and practices in the field of combating BEPS. The main guideline for this work is the consecutive implementation of the OECD recommendations. Despite all the obstacles, I'm proud to say that the result of our cooperation with the OECD, implemented gradually to the tax code of Ukraine, companies voluntarily increased their financial results within 2015 and 2024 by more than 37 billion Ukrainian hryvnias, which is equivalent approximately to $1 billion US. Specifically in 2022, the financial results of the companies were increased by $151 million US, also approximately, and respectively in 2023. This figure was increased by 188.5 million US dollars. It should be noted also that in 2023, 327 million Ukrainian hryvnias, that is also approximately 9 million US dollars, of tax revenues came from secondary transfer pricing adjustments. I mean, constructive dividends, which is 30% higher than in 2022, when the rules for constructing dividends started to apply for the first time. It is important to emphasize about the main results of cooperation within the last 2 years. Ukraine continued implemented all necessary domestic and international mechanisms for the automatic exchange of information. Thus, in 2022, Ukraine joined the MCA-CBC, and it is expected that the first exchange of information in accordance with the CBC standard will take place in 2026. The Ministry of Finance also continued its comparison and improvement of transfer pricing rules, aiming to bring them in line with the OECD transfer pricing guidelines for the multinational enterprises and the tax administrations. For the time being, we are undergoing of the comprehensive review of these rules by Thomas Balka's team and developing amendments to the tax code to close remaining loopholes and achieve a maximum compliance with OECD guidelines as revised in 2022. In 2024, a relevant tax draft law should be finalized. It is expedient also to say that OECD kindly agreed to launch the online transfer pricing trainings under support of the intensive capacity building program, which will undoubtedly contribute to raising the professional level of transfer pricing control. Such trainings as TP course fundamentals, financial transactions training, workshops on appropriate and effective use of country-by-country reports were successfully completed. It is worthwhile mentioning that the State Tax Service of Ukraine has applied to participate in the Tax Inspectors Without Borders to receive expert support and practical experience in the transfer pricing practical cases. At the end of my short presentation, I have to say that Ukrainian government, the Minister of Finance, are making all possible and impossible efforts to develop Ukraine, to make its system predictable and enforceable, fiscally neutral, that takes into account the requirements for Ukraine's integration to the European Union, into the global economy, in the status of reliable tax jurisdiction, and provide taxpayers with opportunities to fulfill their obligations, which is necessary for recovery and sustainable development of the country. I believe that our endeavor under support of the OECD will be feasible and successful. Thank you for your attention and strong support. Thank you so much.
Thank you, Mila, and congratulations on the achievements. It's impressive taking the current circumstances, and we will certainly carry on providing you further support. So thank you very much. I would also like to invite our next speaker, Mr. Webster Mulenga from the Zambian Revenue Authority, to share other perspective on experience from capacity building, and especially the effect on voluntary compliance. Webster, are you with us? And can you please take the floor?
Yes, so in the past some mining companies were not declaring income on precious metals and even other byproducts. In this country, predominantly the mining centers on copper, but they are byproducts of copper. Some of them are precious minerals such as gold and silver. Since mining companies often sell these minerals to related companies, they didn't find it necessary to declare some precious minerals. But after the help we have received over the years, we are seeing mining companies now declaring the mineral lot on these minerals and also paying income tax on the minerals. Then in the past, we noticed that because of the off-take agreements, companies here have, especially with related parties, we see a component of commissions on the sales of copper. So these commissions were paid to related companies who were selling on behalf of mining companies. Over the years and lately, we are no longer seeing this feature. We used to see a lot of hedging arrangements, and the hedging losses arising from these arrangements within the groups were being seen in the accounts of mining losses also. But in the end, this has a common feature in the mining companies. And we have also seen the changes in business models. In the past, mining companies or the group companies may segregate their operations so that because of the tax rate differentials, a certain component of the mining activity could be carried on by a sister company. Now, what we are seeing is that the mining companies now are doing all these activities brought about. Then, because word has been going around that there is now increased capacity in the tax administration, mining companies are coming forward with the self-disclosures, the voluntary disclosures of their transfer mispricing. And often they ask for the waiver of penalties and all. And since the consultants, the mining companies, are the same consultants to companies in other sectors, we are also seeing voluntary disclosures from sectors rather than mining. So in terms of the impact financial, I only have for 3 years, I've seen additional tax rising from this help in 2.5 years, amounting to about 58 million US dollars. Now, for a small economy like ours, this is huge, just coming from the mining sector. I think my intervention ends there. Thank you. I hope I'm within the 3 minutes.
Thank you very much, Webster. Thank you for taking time and sharing the story of Zambia. Indeed, impressive results over the years. By the way, I would also like to point out we have a tax and development case study on our website summarizing some of the recipe for success, which has contributed towards increased voluntary compliance of the mining companies in Zambia. So thank you very much. And I propose that we move to the next slide to discuss also about the challenges that we encounter when we are delivering our capacity building work in transfer pricing. There are various challenges that can also reflect risks that we encounter. We try to carefully manage these risks, but sometimes some of them materialize, and it's also about how we best respond to such situations arising. One of the challenges we encounter is the lack of political support for implementation purposes. Not all the countries and not at all time keep the same degree of support for this long distance effort or long distance run that I described. So importance of consistency of the political decisions, which require investments in the capacities, investments in building legislative framework are critical. If priorities change or there is lack of political support, it can endanger the continuity and sustainability of our efforts. Another challenge that we encounter in some countries is the business lobby pressure. Taxpayers naturally don't necessarily want to pay too much tax, and this can show with different legislative processes when laws can be amended in the last minute when in Parliament in a certain way, which can create a loophole or gap, which can have significant impact on the effectiveness of the legislation. So that's a danger that needs to be carefully monitored. We try to address it by monitoring the legislative process and providing support to the tax administration and Ministry of Finance to keep an eye on the possible amendments that could be introduced when the legislation is in that legislative process. There could be institutional risks. Also, within the institution, there could be change of priorities, change of focus, reallocation of resources, which can endanger the continuity of support, especially when it comes to the institutional capacity building. If the tax administration will change their priorities and will decide, oh, we don't need a transfer pricing expert, so we'll not necessarily create a special unit, or they will not retain the people, it can basically mean that part of the efforts may be endangered or even lost. That closely connects with the next challenge, which is critical loss of knowledge within the tax administration, the phenomena of brain drain. We can observe in some countries that people we train may not necessarily stay for too long. They simply become really valuable experts. The business sector equally needs that expertise. And people with the transfer pricing knowledge, they are not growing like mushrooms, right? So it takes time to grow such capacities. And it's very important to realize that there need to be proper set of policies to ensure that the people who have this valuable knowledge are then also staying with the tax administrations or ministries of finance to continue using that knowledge for the purpose of helping to mobilize the national revenues. Finally, the last type of challenge we can encounter is force majeure. There are situations which could be sometimes beyond our control. Example of that was, for example, the COVID pandemic. It completely disrupted our, let's say, ongoing activities. But of course, we all had to adjust, and like everybody else, we learned to provide our assistance also in remote, virtual mode, which in fact even enhanced our ability to support countries today, because a large number of the work we do is now a combination of the in-person and virtual engagements. So with this, I would propose that we move to the next slide, and I would like to introduce the last speaker. It will be Miss Andrea Medina from the Dirección de Impuestos y Aduanas Nacionales from Colombia.
Thank you, Thomas, and thank you everyone for the invitation to participate in this important event. I'm going to switch to our language in Spanish.
Related to our experience and the challenges that we have faced concerning all this information process and the strengthening of capabilities, let me tell you that the first steps were to start with a very important program that we carried out with the OECD. It was a 3-year period concerning transfer prices. This program was organized between 2012 and 2014. It allowed us to consolidate a centralized audit team on transfer prices, and they were able to specialize on this topic, and they began carrying out audits concerning the transfer of prices. So our big challenge at present was to maintain this team in a centralized manner. It had been trained for a 3-year period, and we were able to do so. Now, our strategy to be able to keep up this team, to guarantee that we would continue to strengthen their capabilities, and this would allow them to face new challenges concerning transfer prices, with, of course, more complex operations and thereafter. Although the only reason for which experts have left tax administration, it's because they have retired. But thinking about this situation, we began with a second stage throughout this information period, where we decided that before these experts were to retire from the tax administration, together with the other individuals that are part of the team, to be able to train new officials that would become being part of the team concerning the transfer of prices. And also to decentralize this, we created 5 new groups in the 5 regional most important offices in the country. So what we did is that our experts, they began training new experts or new officials, new auditors concerning transfer pricing. Well, our intention is to keep up in these training programs. So what we've done is to request new programs, new support from international agencies, like with the OECD, with officials focusing on more complex matters on transfer pricing. And of course, our teams have been updated. They have more technical qualities in all the audits that take place. And at present, this is the team that is conveying the knowledge to members and to officials that belong to different areas in the tax administration. For example, officials that work in the legal department, and it's these people that defend transfer pricing matters in courts, as well as officials that are keeping up concerning APAs and MAPs related to transfer pricing. So we have had the opportunity of conveying knowledge to the different areas of our entity. Our challenge, of course, is to continuing being committed, and of course, to continue training our people and to keep up with things concerning the new structures that are taking place in terms of transfer pricing. Of course, all of this has generated better tax administration, income tax matters as well, and we've been able to obtain the proper technical requirements presented by the multinational groups. Thank you.
Thank you, Andrea. Very interesting experience that you can share with us. Also, greetings from Diego, who is with us and supporting a lot of the countries in the region. Now, let us move back, and I will transfer the word back to Samia to talk about a regional approach, because we can see increasingly opportunities and potential and synergies of engaging with countries on the regional level. Samia, over to you, please.
Thank you, Thomas. So after presenting these bilateral assistance programs, we would like to present a regional assistance program that the OECD has put into place in West Africa in collaboration with the ECOWAS and WAMU commissions for 15 or 16 countries, actually, because we had the 15 countries of ECOWAS plus Mauritania. Through this program, this assistance program, the goal is to make sure that this assistance and transfer pricing capacity, this building program was made available to West African countries, and it was extremely fruitful because the results are outstanding. This is not a program that's finished yet. It will end later in 2024, but we've made significant progress thanks to this program, namely the elaboration of 3 community guidelines, 2 on transfer pricing and 1 on effective beneficiary, and another one on mutual administrative support. These 3 instruments have been approved by the ECOWAS minister in July 2023, and for the last one by the Conference of Heads of States and Governments. As part of this program, we've also worked on capacity building for the 16 tax administrations, and we're creating a transfer pricing expert network with around 30 representatives from tax administrations of these different countries that were trained between 2020 and 2024 on transfer pricing. So it was a long-term project. The goal was to start from the fundamentals, but also to address complex issues. But this is only possible if it's the same participants every time that attend these training seminars throughout the period of the program. And this is the 5th training workshop that we organized. We've organized it last week in Ghana, and I would like to seize this opportunity to thank all the participants of this network, and some of whom are present today. Beyond the capacity building for transfer pricing, we've also worked on capacity building for these tax administrations with regards to tax convention and tax treaty negotiation, but also information sharing matters, because this is really, really important when it comes to transfer pricing audits. This year, we're continuing our work still with these 16 countries. After drafting this guiding principles on transfer pricing, we're working with these countries on a transfer pricing regulation model in order to help them. And at the end of 2023, we published a case study, as you can see on the screen, in which you find the regional approach rolled out in West Africa, as well as the lessons learned with regards to assistance. and assistance programs. We're lucky this afternoon because today we have Mr. Salifou Chemtore, who's the Director of Customs, Union and Taxation with ECOWAS, and he is going to be able to give us his perspective on this assistance program that was offered to the member states of ECOWAS plus Mauritania. Salifou, over to you. Thank you so much, Samia. Thank you for giving me the floor during this very important day organized by the OECD. I would like to highlight the benefits that ECOWAS got from this program. So we have 15 members in ECOWAS plus Mauritania that was involved in the project. ECOWAS's mandate is also to work on tax matters, and in this regard, we harmonize tax administrations and tax matters across the different states. This is why it's important to have this type of program to support our states, member states, for better regional integration. And in this regard, as Samia has said, benefiting from support was a determining factor because last year, heads of states and governments and the Council of Ministers have adopted 3 texts that are major texts, which are going to be extremely useful, and they will be adopted and enforced in the internal domestic legislations of our states. And we believe that this will be a great framework to improve consistent tax policies across our different countries. This is an experimentation that we are trying, and the results have been extremely fruitful so far, as Samia has said, because it has allowed us to work with WMOA based in Ouagadougou and ECOWAS, but we've also implemented training programs because the text and the guiding principles on transfer pricing require close collaboration with the states, and we need to train the state agents so that we have on-site experts that are experienced to make sure that we are at the same level as international standards. So we still need to do some work. And on the behalf of ECOWAS and the Commission, we'd like to thank you, the different stakeholders of this partnership with the OECD. There was a steering committee for this program in Abuja, that was held in Abuja. And during this meeting, we thanked the OECD for this partnership, and we asked our partners as part of this program, including the EU, to renew this program, to make sure that there's a phase 2 to this program, because we want this program to continue. We believe that we need to continue in this direction, and this way we would save time, especially because we work with 15 countries at the same time. And that's what ECOWAS likes, and this is the approach that we want to continue with on the way forward. And I would like to again thank you so much for giving me the floor to share our experience on the importance of tax matters, because taxes is so important for states to continue to mobilize more resources. Thank you, Samia. Thank you, Salifou. This is a very positive note that you're finishing with. All these technical assistance programs goals aim at really helping mobilize more domestic resources, because it's so important to fund growth and development. I would like also to seize this opportunity, Salifou, to thank the 2 commissions of ECOWAS and WMOA for their close collaboration as part of this regional assistance program. Because as Thomas was saying earlier, I believe that political support is essential if we want to have positive results in these programs. So again, thank you so much to you, to the 16 countries that have been extremely committed in the different works that were offered to them and that have allowed us to reach the results that we now have and that we can be proud of today. And before we conclude and before we give the floor to the different participants, I would like to remind you of the fact that these technical assistance programs delivered by the OECD are made possible thanks to the financial support of our donors, as you can see on the screen. And we'd like to thank them for that, because they allow us to support the countries that solicit our help, to help them improve their legal framework, to do capacity building for them, to help them mobilize domestic resources. So I'd like to also thank the WAMU commissions, and I would like to thank the participants. Thank you so much. I would like to also thank my colleague Thomas Balco. But I would also like to thank the different speakers, Mrs. Ralpi from Tunisia, Webster for Zambia, Mr. Chemtore from ECOWAS, Andrea Medina from Colombia. And I would like also to thank the Ukrainian speaker who gave us, so it was Ludmila from Ukraine, who gave us the overview of the Ukrainian experience. So with that, I would like to close the session, and I invite you to stay with us for the next session on tax morale at 4:15 Paris time. So you have around 10 minutes, a 10-minute break before we start the next session on tax morale, facilitated by my colleague, Josie. So thank you very much and have a nice afternoon.